Good afternoon, my name is Craig Earle, market analyst at ALPARI UK, and welcome to today's daily market update. Today we're going to start by taking a look at the major stories and moving the financial markets, and it's actually a pretty quiet day today. The major story actually moving the markets today is the comments from the EU official last night. Now, we've actually had positive Chinese data out this morning, which would usually have sent the markets higher. Obviously, Chinese data is very important to the markets. They are the world's second largest economy, and we are looking towards China to actually drive the recovery as we saw after the financial crash in 2008. But it's been completely overshadowed by these comments made by the EU official last night. Now, what he said was, despite the fact that the finance ministers were due to sign off this Greek deal next week, and then they'd receive the next payment of this bailout before they go bankrupt at the end of the month, they've actually delayed the signing of this until the end of the month, right up until the point when Greece are due to run out of cash. Now, this seems completely ridiculous. The Eurozone leader has been criticised on numerous times in the last few years for not acting quickly enough, for taking the time, for prolonging the crisis, and now they're at a point where we were due to see it signed next week, and they've prolonged it by an extra 3 weeks for no apparent reason, right up to the point where Greece are due to go bankrupt. So it's just going to raise the uncertainty that we've already seen for a number of weeks due to the presidential election, and we're just going to keep this uncertainty going now for another few weeks, and it's completely unnecessary. It's really raising the question as to just how competent these Eurozone leaders are and just how eager they are to bring an end to this debt crisis, because every time we start to see a little bit of progress being made, it gets prolonged and prolonged and prolonged again, to the point where you're looking years down the line. We're now 3 years into this debt crisis, and we don't seem a hell of a lot further along than we were 3 years ago. So there is a lot of questions now being raised. There's no reason why we need to see this decision be delayed by 3 weeks yet. That is looking like what we're going to see, and like I say, that is why we're seeing now the markets today actually trading lower rather than higher, which is what we would have expected usually if as a result of this Chinese data. Now, like I say, we did see some better than expected Chinese data out so far today. We saw the CPI figure actually came out at 1.7%. We were expecting a figure of around 1.9%, and this is actually the lowest since January 2010. Now, the significance of this is the fact that we are starting to see a moderate recovery in the Chinese economy in the fourth quarter. We had a difficult third quarter where we actually saw growth of only 7.4%. This is extremely low growth for an economy such as China. And so we started to see this pick up in the fourth quarter, and now we have seen the inflation figure remain low. So what that does mean is that we could still actually see some additional stimulus from the People's Bank of China. Now, we have already seen numerous stimulus measures taken this year. We've seen bank reserve ratios cut. We've seen two interest rate cuts. We've seen cash injections into the financial system. We've seen numerous stimulus measures taken by the PBOC so far this year. And what this does is it keeps the door open for more. And the more you can stimulate the economy, hopefully you can get that recovery back above, so we can get the output back above that 8% area again. So this can obviously then move on to try and stimulate the rest of the global economy. Like I say, there's the global economy is very much struggling excessively at the moment. We've seen the impact on Australia from the slowdown in China. The slowdown in China is actually off as a result of the Eurozone slowdown and also the US. So we are looking to China now to try and stimulate the global economy again. So this is a positive move forward. And this inflation figure, like I say, just opens the door to further stimulus, and therefore opens the door to more chance of growth in China, and therefore more signs of the global recovery. But like I said, this was completely overshadowed then by these comments. We are seeing markets trading lower rather than higher, which is what we'd expect following figures such as these. And we've also seen some more positive data out of China this morning. We've seen the industrial production and retail sales beat expectations again, just showing that we may have actually bottomed out in the Chinese economy. We may be now just looking upwards from here. We've seen a slowdown over the past few months, over the past 6 months even, and we may have now bottomed out. So we are looking hopefully now to start moving up in the Chinese economy. We saw that figure of 7.4% for the third quarter GDP, and maybe we're looking something towards 7.7, 7.8 for the fourth quarter. So things are looking positive in China. But like I say, the overall tone in the markets is to do with this uncertainty. We had the uncertainty over the presidential elections. We had the uncertainty now over the Greek deal, which has gone on for weeks already, far longer than anyone was expecting to begin with. We were expecting this to be sorted in September, and we're now in November, and we're still waiting for it to be completed. It's now going to be the end of November. So that's 3 more weeks of uncertainty. Following this, we're going to have the uncertainty surrounding the fiscal cliff, which is unlikely to be resolved before the final day, before the final hour of the final day, like we saw last year with the debt ceiling. So this is going to take us right up to the end of December. We're going to a lot of uncertainty in the markets, and you know what they say the market hates uncertainty, and we've seen that recently. If you look at the stock indices, you can see that they've been trading within a tight range recently, and that looks now likely to continue probably now for the rest of the year, I imagine. And then shortly after that, you've got the fact that the Eurozone are trying to implement this banking union, but like I say, at least until the end of the year, it looks like we're going to see a lot more uncertainty in the markets, which means we're likely to see these markets continue to trade within a range. Now, if we take a look at what this means for the currency charts, if we start by taking a look at the euro dollar, you can see that has fallen significantly in the last month or so. It's currently trading just above 127. Now, of course, when we do have this uncertainty in the markets, people do look for these safe havens, and one of the safe havens is the dollar. And that's what we're seeing here. We've seen the euro fall significantly against the dollar. It's currently trading just above 127 after falling below that pennant formation that we've been speaking about on numerous occasions recently. And the reason why I've left that on the chart is if we do start to see it turn a bit more bullish, I do expect we'll see it go up and maybe test the bottom of that pennant as a new area of resistance. So that's why I've left that on there. But for now, it's currently trading around this 127 area. If you add this Fibonacci retracement on there, you can actually see that it found strong support yesterday from that 38.2% retracement. Now, yesterday I suggested that this may be where it bottoms out and we could see it trade higher from here. Now, this is the first test of that. It's currently trading just below this fib line. If it closes the day back above here, this would suggest that it has bottomed out and that we're likely to see it trade higher over the next few weeks. If it does close below here, it would suggest that we're going to move back towards this 50 fib line just above 126. Today, though, if it does continue to trade below here, we should see it find support around that 127 area. That has been a key level historically, so I imagine this is where it's going to find strong support around here. If we take a look at the cable charts now, you'll see that it's currently trading around just below 160, around 159.50. Again, we have seen sterling make significant losses here. Not as much as the euro, but we have seen it make strong losses here again as people are favouring the dollar in times of uncertainty. And what we're seeing here is we're actually seeing it trading back below this ascending trend line. Now, on each of the past 4 days, we have seen it test this trend line as an area of support. And in the past 2, we've seen it trading below this trend line for most of the day, but recover and close back above here. This again confirms this is an area of support. And what we're seeing today is we're seeing the same again. It's trading back below this trend line. What today is, again, it's the 5th test of this trend line. If we see it close above here, this would suggest that it is a solid area of support, and we should see it start to trade higher from there. If it closes below, it could suggest that we're going to see a significant move lower. So it's definitely worth keeping an eye on this chart over the next couple of weeks to see, over the next 24 hours at least, to see what we can expect from here. Like I say, if it closes above the trend line, it would suggest we're going to see a move higher. If it closes below the trend line, it would suggest that we're going to see a significant move lower. Looking ahead to the US Open now, the S&P is expected to open flat, the Nasdaq's expected to open up by around 4 points, and the Dow's expected to open down by around 14 points. So all in all, just like we're seeing in Europe at the moment, the indices are expected to open relatively flat today. Volume's low, volatility is low, and while this uncertainty is going to remain in the markets, we can expect more of the same over the next few weeks as well. For more news and analysis, you can also check out the ALPARI newsroom. That can be found at www.alpari.co.uk/newsroom. You can also follow us on Twitter. My Twitter username is Craig Earlham, and you can also follow the ALPARI newsfeed as well. That's ALPARI.FOREX. Thank you very much for listening. My name's Craig Earlham, market analyst at ALPARI UK.